Hello traders out there in Traderland, happy Independence Day. D7 here with Grok Trade. This is the weekend edition video, long weekend edition video. I'm throwing my mouse all over the place. This is good through July 5th, 2020. It is July 4th. All right, we ended the week on a bullish note. Everybody going higher, 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 higher across the board. Silver though lower, everybody else higher. VIX lower by 3%, so confirming the bullish run. Ending, we had a really bullish week, guys. A really bullish week. Everything's going nicely. But here's the deal. Here's the deal. If you look here at the symmetrical triangle, what you'll see here is consolidation. Remember how I said look for the markets to go sideways? Well, sure enough, that's what we're seeing. Man, I have lost everything. My mat, my thing. All right. Going sideways. That's what we're seeing. We got a big symmetrical triangle. Let me tell you why this is so important, okay? Why this symmetrical triangle is so important. Right before I do. The only person in the world that I would allow to trade my own money, the only person is Mark the Meerkat. He is going to be doing a 3-day class in just a few weeks, okay? In a few weeks, Saturday, Sunday, and Monday, it's done through the computer. If you want in on that, go to Grok Trade. When you go to Grok Trade, click on Trading Mentors, okay? That's how you do it. That's what you do. Also, we have Romulus, hedge fund guy, 25 years trading experience. He is now teaching also. If you want to get in on his class coming up this month, go to the same link, say that you want trained by Romulus. All right. So here's why this symmetrical triangle on the S&P 500 is so important. One, the S&P 500 is more important than the Dow because Dow only has 30 blue chip stocks in it. The Nasdaq is 65% weighted towards technology. Russell's smaller cap. The S&P 500 is equally distributed, and they are blue chip companies. That is why we, on the professional expert side of things, we hone in on the S&P 500 because that is reality. The S&P 500 is reality. Now, I'm looking at the daily chart here, big symmetrical triangle. We are just now above the moving averages, but do you see how all the moving averages are coming together? They're coiling. They're coming, and when the price action, the bars get caught up in these moving averages, like getting caught up in sticky spider webs, and it's hard for them to escape from. So we're caught up in them right now. Expect this to stay here, but we're going to either get a breakout or a breakdown. That's what happens in symmetrical triangles. I think we have a better chance of breaking up than down just because of this. This is a golden ticket. Give me a like if you like what I'm getting ready to show you. We have support here. We have support here, right? This line comes up, 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 right here. Do you see this? This line? We failed to get down there to that line. So it's relative strength. So in other words, the bears weren't strong enough to get it back to previous support levels. Couldn't do it. So that's why I think there's an edge on the bull side for it to break out to the upside. It's just a slight edge. Anything can happen, of course. We don't know what the future is going to bring us. We trade what we see, not what we think. Pause the video, rewind it 5 seconds, listen to that again. So here we are. I want to show you this, the weekly. The weekly in the S&P 500 is up, 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 sideways base, guys. That's a high base formation. So this is much more bullish and it is bearish. However, we have a previous swing high before this. So a lot of times these high bases get neutered. They lose their potency, their effectiveness, okay? But still, nonetheless, we're above all major moving averages. We do have a high base on the weekly chart. Now, if you go to the monthly chart, we're just getting started here in July, so we're just getting started. So this candlestick that we're looking at is probably a mini-me month, mini-me candlestick, okay? And what we have here, up, 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 mini-me little guy. This could go way up or it could go way down. This is the monthly. We're only a day or two in, all right? So here is the interesting thing. Here's the interesting thing. We are up, 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 up. We have a lot of upside opportunity, all right? I see that. But if we stall out here, and this is all the bigger this candlestick gets on the month for the remainder of July, okay, I think the odds are against that. But if that happens, this will be a great bear pullback. Look for that to drop. So here's what needs to happen for the rest of July. We need to go higher. If we do not go higher for the longer time frame, this is a bear pullback, and look for this to drop multi-months to the downside, okay? That's me, 22 years trading experience, really foreshadowing, okay? So just be careful with what I'm saying there. On the weekly, again, I want to say high base, higher probability of it going higher. And if you go to the daily chart, we're in a symmetrical triangle, and it's saying, are we going to break up or break down? All I know is we have a slight edge to the upside. But at this moment, nobody knows, okay? Nobody knows what will happen. All right. Quick look at the diamonds. This is a bearish. A lot of these other ones look a lot more bearish, okay? You're going to see these trend lines. We got these trend lines coming up. We drop below it, and that trend line is acting as resistance. This thing is looking like it's wanting to drop, but this could just be a bull flag. It needs to go bullish, and right now, okay? If it doesn't, this would be a great place to be looking to short the down. Nasdaq, as long as it stays in this channel, we are fine. As long as it stays above these moving averages, we are fine. Russell 2000 again is bearish. Support broken. Now is resistance. Bear pullback. That's a great place to short, guys. Great place to short. But if we this week or the coming up week, if we go bullish, that'd be real. That'd be so needed, guys. We need that. Financials. I was hoping financials would show me something bullish. It is showing me something bearish. Support. Now that support line is big time resistance with a low base formation below all major moving averages. This could be foreshadowing what is to come, and that means down. Down. We need next week to be bullish if you're long. If you are short, you have a lot of great arguments here, okay? A lot of great arguments. US dollar, that is a bear flag. If you don't know what a bear flag is, go over here to free online trading education, freeonlinetradingeducation.com. Click on chart school. When you click on chart school, go to chart patterns. When you go to chart patterns, look for bear flag, right? Bull flag, bear flag right there. And you can see. Well, let me just show it to you. I'll just show it to you. There's the bear flag. Big drop, flag. Big drop and flag. Here are what they look like. And if I go back to the chart, down, that's what they look like. Okay, bear flag. So that's bearish. Silver has a big bullish pennant. It broke out. It's taking a breather here. I'm looking for more upside on silver. Gold, yeah, it's in a big rising wedge, and it's on, even though it's above moving averages, guys, even though it keeps going higher, it's really sucking down on top of the lower trend line. Do you see how it's spending its time at the lower trend line, not at the upper trend line? That's usually pretty bearish. The VIX, though, looks really bullish. And let me tell you why. We crash down here, the VIX, that's the fear. The fear keeps going lower and lower. We get to the rising 200-day moving average. This one right here. This guy right there. And when that happens, when that happened here, we get a hammer and we shot up. Fear shot up. Fear went boom to the upside. Look where we're at again. Another hammer. We went down and touched the 200-day and we rallied right back. That is a great area to go long, meaning there, a good reason to go short, because this tells me we have a good chance of this going higher. So you'd go long the VIX but short the market. Okay. If you're not understanding anything I just said, take the class with Mark or Romulus. They'll teach that all to you. Because one thing about the mentorship is we give you 48 lessons before you take the class. Those 48 trading lessons are how to trade, and where you get to learn all the stuff that we don't teach you here, right? On these videos. You learn all the other good stuff. We give you that first, then you take the class. But anyway, Bitcoin, bull flag, but it's under moving averages. Look for it to break out. Okay, so a lot of arguments to the bear side, guys. A lot of arguments, but then there's arguments to the bull side. That is what happens when you have symmetrical triangles in the broad market, and that's what we have here. because we have a symmetrical triangle and it entered from the low side to the high side, that is more argument that this should go higher. But I just showed you a lot of things that would fly in the face of that. Fly in the face of that. Quick look at Apple. Long as Apple stays above this trend line and the moving averages, we are fine. But see how it's just sucking down on this? Hotkeys changed. I'm using TradingView. There's a link down in the description for TradingView. You can click on that to see all about the benefits. But anyway, we're at this support line, support line, support line, support line. Let me go to a line chart. You can see how we're here, 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 here. It needs to stay above that. As soon as it goes below it, it looks like it wants to go below it. As soon as it goes below it, I would short that for a short time. Okay, short time. It's had a nice run to the upside. It might be ready to take a little bit of a breath. That'd be interesting to see. For sure. So anyway, let's go to monologue time. A couple things. If you are just here for the stock stuff, you are dismissed. We'll see you later. This is just me talking about whatever comes to my mind. So you guys talked about my wall behind me, what I should put up, and the vast majority of you said nothing. Just keep it as is. And the next level down says put a bear on one side and a bull on the other side. I read all your comments, every one of them. So and then, you know, the monitors, a couple of you guys like the monitors. I kind of like the idea of the monitors because I could put whatever I want on that, right? And but I like it plain too, but that's fine. All right. Let me bring you guys up to speed on what I'm doing. I'm just starting, but I'm taking my Series 65. That allows me to be an investment advisor, like an expert professional. I laugh at that because anyway, so I'm going, that test that I'll be taking is the real deal. For you guys that have your Series 65 or your Series 6 or 66 or Series 7, holy smokes, kudos to you guys. Oh man, I'm 47 and I'm geeking out on learning all the new stuff, but when it gets into regulations and the minutia of useless facts stuff that I have to memorize, I'd rather be gagged with a chainsaw. But I'm going through it. Here's why. The question is why. I could say as an educator and keep my life really simple. Educators, as an educator, I'm not under regulations. I'm not regulated, and that keeps that freedom is freeing. Independence Day, July 4th, right? Free. We like being free. Freedom. We like that. Freedom from government, freedom from tyranny, freedom. For you guys who fight for our freedom, who are in the military, kudos to you. Much respect to you. My flag is out front flying on my porch. But anyway, the reason I'm doing this is this. I have developed a trading algorithm. It's my black box. This thing right now, if it's uncompounded, okay, with no compounding, it breaks out to like 366% per month. I had a correction. My developer said, you've got to take out the compounding to get a correct number. So my algorithm right now is at 57.33% per year gross net profit. That is the average that we've seen in the last 7.5 years. I finally have a computer program that kills the market. If you look at just the bull run we had the last 8 years or so, the average per year is around 14%. But if you go back like 105 years, it's 13.8. So and then you'll have bigger years and smaller years, but those are the averages, okay? That's the average. So just think the average is 13.8, between that and 14 point whatever it was, 14.5 I think. That's the average. So in this bull run last 11 years, just assume that you could be making 14%. I'm doing 57.33% on average. Warren Buffett does roughly 10% better than the markets on average per year. 10%. So that puts him around 24% the last 8 years. The problem is the last 5 years, he's underperformed the markets, even with him buying at wholesale levels. I'm geeking out on you. I don't mean to get all into the weeds. But the point here is my algorithm is beating Warren Buffett's performance by over 2 times, 200%. We are smashing buy and hold if you are in the broad markets by 4 to 5 times, or 400 to 500%. My algorithm is the real deal. So what I want to do is legally be able to trade your accounts with my algorithm. I can't do that legally unless I'm licensed. So I'm just now in unit number 1 in a bunch of units through Kaplan University. I'm a number 1 out of a gazillion. I'm just getting started, but you can't believe the stuff I'm learning already. But what that will allow me to do is trade your account so you can benefit from those insane performance numbers that we're getting on back testing. And specifically who I am looking for are individuals who are considered accredited investors. The accredited investor is somebody considered highly savvy, but legally they have to have a net worth of $1 million, not including their home or residence. So take the home and residence out. They need to have net $1 million. So that's an accredited investor. Or I can work with individuals who put down $500,000. If you put down $500,000, we don't have to confirm that you're an accredited investor. Okay, so that is what I'm after. The more I look at every dollar like an employee, my employees have to be making me money, not losing me money. The more employees that I have or can borrow, the more we can make. So I'm looking for a lot of money. But this won't be until sometime September, October, okay? I'm just foreshadowing here. I used that word a couple times on this video. Not sure why, but there it is. So this is out. But if you have an interest, there's a few of you accredited investors I'm keeping in close contact with. There's 5 or 6 of you right now. If you want in on my little short list on being kept up to speed on what I'm doing here, shoot me an email at DES, Delta Echo Sierra, at groktrade.com. At groktrade.com. Send me an email, and when you do, just say that you would like to be on the short list to be kept up to, up to date on the latest of what we're finding in our algorithm. Our algorithm is highly optimized. It is killing it. We are over 80%. Right now, last I looked at it, we're at 82 or 83% win ratio. So in other words, for us to have 2 losing trades in a row is highly unlikely. For us to have multiple winners in a row, highly likely. Think about that for a second. And we're now over 4.5% on risk reward ratio. It's called the profit rate, factor, I think is what it's called. But in other words, we call it the reward to risk ratio. Every dollar you put on, how much are you getting in return? So we are at like 4.5. So in other words, every dollar you put in, we're getting back 4.5 on risk to reward. So when we lose our buck, we're making 4.5. These are just insane. And so anyway, we're using a leveraged ETF, and it is long term. Where the trades are only going, right now we're averaging roughly every 14 bars, and each bar is a week. 1 trade in and out. So we'll make on average a trade once a quarter. And so we stay in these winners for a long time. And that's what's given us these great things. But if the market starts to drop, the algorithm gets us out of the market. So we just sit out and wait for it. So that's really, I've got some high hopes for it. So I'm so high on this algorithm that anybody that's ever worked with me on the algorithm has signed an NDA. They're locked down with an NDA. Matter of fact, I had 6 developers. The closer we got to a working one, the smaller my developers got down to. Now I'm down to 1 developer. And he's the only person that knows the black box. My black box, I'm looking to license out to other brokers. So if you are a investment advisor right now and you are looking for an algorithm, you don't have to drop hundreds of thousands of dollars to get access to a winning algorithm. So if you want license to this, if you're a hedge fund, small, medium, or large hedge fund, or if you're an institution listening to this, or if somebody shared this video with you and you're listening to it, I'm happy to chat with you. I will get on a private Zoom with you. I will show you all the numbers in real time. I am trading the algorithm live with my own money. 100% in. 100%. So that should tell you something. So at this moment, I'm not day trading. At this moment, I'm not swing trading. Right now, I'm investment trading, and loving it because I'm trading the algorithm. So that's what I'm working on. And man, let me know if you have any tips on taking the Series 65 tips. I would like to know them. If you guys have taken it, let me know what certifications you have. Just tell me down in the comments. Let's geek out a little bit on you guys earned that certification. You earned it. So anyway, and like a CFA, if you're a CFA, let me know. Woo, that's the big dog. That's the big dog. So let me know on that too. So give me a like, give me a comment of some sort. If you have a different idea what should go behind me on the walls, let that be. But have a very safe 4th of July. And I bought $400 over of fireworks. I've loaded up. I backed up the truck, bought $400 worth of fireworks because they're not doing fireworks in my city. So because of that, I said, we'll do our own. We got a bunch of people coming over and we're going to have a great celebration. Be safe. Catch you guys later. Bye.